Welcome to the Lord Abbett 2020 Investment Outlook. My name is Tim Paulson, investment strategist at Lord Abbett. I'm joined with some of our leading investment professionals.
My name is Ya. I'm a fixed income portfolio manager.
Tom O'Halloran, portfolio manager of the Innovation Growth Strategies.
My name is Tim Paulson, investment strategist at Lord Abbett.
Hello, my name is Dan Solender, director of tax-free fixed income.
Hi, I'm Leah Traub, a portfolio manager in taxable fixed income.
I'm Giulio Martini, director of global asset allocation and manager of the multi-asset portfolios.
We'll be talking about markets today, what's gotten us to this point, what we think that means for the coming year, and key risks to those views that we'll be looking out for. All right, so certainly political uncertainty in the US could be a key narrative as we go into the next year, but it's hardly unique to the US. Brexit is in the headlines constantly, emerging markets as we think about political uncertainty in LATAM. How do we think about this? How do we think about valuations in emerging markets when we have so much uncertainty and volatility?
Sure. I mean, we have definitely seen a very big pickup in political unrest again, right? We last saw it, I would say, in the Arab Spring kind of concept, right, back in 2015. And now we're seeing it, again now in different parts of it, right? We actually saw it in France last year with the yellow vests, and then Hong Kong's been going on for months, and that continues. Now we're seeing it really pick up in Chile, which I don't think anybody really had on their radar at all. It's a very stable economic environment from the outside perspective, right? And very, low interest rates, just a very good economic story, but yet you see the inequality there, and you see that dispersions. I think as Q had mentioned, we're starting to see some dispersions in the U.S. consumer. That is what's really playing out globally in a lot of these places between the have and the have-nots, and the increase in kind of the income inequality that's really bubbling up there, and it's manifesting itself as you get these political transitions. So what's interesting is that when you look at the emerging markets, you really do have to pay attention to elections, and the markets obviously really do respond, and real policies change. I think it's a little bit different in the U.S. Just because we have very good institutions, very stable environment, that we're a little bit more comfortable with political transitions. Quickly on Brexit, I'll just say that we are looking like that we are going to get some type of deal once we get through. They have elections coming up next month, and then maybe Boris can get his little deal through. Now, that still means we have 2 more years at least before they actually leave. The UK actually leaves the EU. And I actually think Brexit has done more damage to the UK economy that is going to be lasting, right? They have investment has been not happening, as Giulio mentioned. But if we do get some, initial kind of agreement that they will actually leave, it could actually help sentiment in the Euro area. So that is one thing we're looking at that maybe is actually a better political environment in 2020.
I mean, another interesting thing that I think is tied to all this is that, we have 3 global financial centers in the world: New York, London, and Hong Kong, really. 2 of them are under a huge amount of pressure for structural change, right? And I think that as the situation in Hong Kong unfolds, it's, in tremendous flux. No one knows what's going to happen. But the fact that things have been getting worse and worse and worse, and China has not sent in the military, I think is very revealing, because the value of Hong Kong is that it's really the gateway to China financially and to much of Asia, but it has Western law because of the British colonial tradition. And so it gives a certain amount of comfort. And I think in China holding off, moving into aggressively tamp down what's going on there, you're seeing an interest in really preserving the value of Hong Kong as a financial center that would be lost if China was very heavy-handed and the rule of law came into question there. In the UK and in London, I think you're seeing something, very different, because by Brexiting, what the UK is doing is really calling the value of London as the financial center for Europe and the Euro area into question. It's also, even if we do get a deal for Brexit, one of the issues that's going to remain is what happens with Scotland and what happens with Northern Ireland, because part of the attraction of those parts, of the UK to the locals in the area is that the UK is part of the EU, and it's unclear whether they will want to remain, part of Great Britain or the UK after Brexit occurs. And I think that's an uncertainty that really lingers. And of course, all the governments in Europe are really trying to poach financial businesses, financial services, and other kinds of services from London. And so I can see Hong Kong being resolved somewhat favorably when things die down and, we're 12 months down the road. I think London is maybe a bigger problem. And of course, the big beneficiary from all this is New York, which is the one where there's really no question about the stability and the structure.